But as much as that is important to them, the revenue is important as well. So it's not like this one is more important. They all come together in a way. So let's look at Meta, right? So look at Meta. So the estimate was their earning per share was going to be 432 based on the prediction, but they ended up reporting 471, which was higher. So you see the surprise, the 0.39 cents equates to 9% above the estimation, which is great. And then if you look at their revenue, they were estimated to report 36.14 billion. They ended up reporting 36.45, which is not even 1%, which is not even 1% surprise. But you see how it moved afterwards. So it's kind of hard to like gauge what the investors what they prefer. Let's look at NVIDIA. And this part of the market or analyzing the market is, of course, the fundamental analysis, right? Because you're looking at the data, you're looking at balance sheet and price per earnings and stuff like that. So look at NVIDIA. NVIDIA earnings per share, they were expecting 5.60. They reported 6.12, which was 9% higher. Surprise. Their estimated revenue, the analysts expected 24 billion in revenue. They ended up doing 26 or reporting 26 billion for the last three calendar months, right? For the last quarter, which was a damn near 6% surprise, right? And they announced that they were doing a 10-to-1 stock split. So this drastic move here is in addition to earnings per share, them beating revenue, plus they surprised everybody with an additional, hey, we split in the stock. You see what I'm saying? Which is very attractive to new traders, because if NVIDIA is trading at $1,064, it's not attractive to regular folks. Like, you feel like this shit is too much. I'm going to spend a whole $1,000 for one share, right? It's crazy. But if they split it and now each share is $100 or $105, guess what? It becomes more attractive to a retail, a newbie or retail traders, because you feel like with $1,000, I get about 9 to 10 shares. Okay, that's reasonable, right? So basically, that's how you look at it.
Like how Zoom beat earnings and then it still fell. Is that like something to expect for it to like bounce back up?
Let's look at Zoom. So what are the factors? Okay, so Zoom surprised by 13%, which was good. Revenue, they were expecting 1.12 billion. They reported 1.14 billion, a 1% increase. So it popped. But at the same time, you have to understand the reason why it's best to combine technical analysis and fundamental analysis is, okay, Zoom was here, it popped. However, there was still resistance here, right? So technical analysis still has to be respected. It popped all right, but I guess in the eyes of the investors, this wasn't as convincing or as bullish from their perspective. So it was good, but it's like, okay, it went up a little bit, but for whatever reason, it wasn't as bullish as you would think. But it went up. So if you had bought it the day before, it gave you money. But for whatever reason, it started to dip again. And you cannot you can't explain. There's gonna be so many theories out there. Okay, it's because of it. Nobody really knows, because in order for you to know, you have to get all the Zoom investors together, and everybody will have to tell you. You get what I'm saying? So if you
Yeah, I
think
get
about
you.
it, it's like, don't even worry yourself trying to figure out why it did this. Yeah, analysts on Wall Street are gonna have their opinions, but understand it's just their opinion. They don't know nothing. They just, putting things out there and hoping one of them will stick, but nobody knows. This we got into this. Well, I don't know who got into it, but I got into it, right? I got into this strictly based on price action. I knew nothing about this company. I've never even heard it before. I don't even know what the hell they do, right? But I looked at their balance sheet, but this was a clean, I think only me and T and maybe a couple of people got into it. But T got out fast because she chickened out and she got out fast. But look, they beat
Really, Wap?
earnings. Oh, you on here? Sorry. I thought you were. But okay, so you see how they surprised? They surprised their earnings per share by damn near 25%, which was insane, right? And then they reported, and okay, so mind you, you can report. So some of the companies are not even profitable, right? They may still, because in order to look at the balance sheet, you're looking at their assets versus their liabilities, and if they are profitable or not. So some companies are still in debt. However, if their liabilities is getting smaller in the eyes of investors, it's like, okay, they're moving in the right direction. So they might still be profitable, but it means, okay, you're doing something. We're moving in the right direction. Like Uber just became profit, and they've been public for a few years, and they literally just started making money. But back to this, I got in not based on anything else, but just based on the fact that this shit was trending down, and I felt like it might pop. So this was sort of like a gamble, right? I got in before and I made money here. I took some profit and I left one to go, and this ended up doing 300%. So you see the move, it gapped up crazy from here to here. Insane, 300%. But of course, it wasn't crazy, because if you play in the earnings, because it can go either way, you don't want to put too much money on it, right? It's almost like a lottery thing. They can beat and you still lose. Let's look at Walmart, right? Walmart, I did the same thing on Walmart. So Walmart, this was the earnings. So the market was here, right here, before earnings. Look at Walmart. They beat earnings per share and they beat revenue by 1.2%. So Walmart jumped from right here, was trading here, went all the way here to 65, right? It could have gone down. I think Target missed earnings. Okay, so look at Target. So you see how Target earnings per share, they missed, but revenue, they beat. And then it dropped. So, but price action wise, the market will always fall to, it's like mean reversion, right? The market is going to come to where it needs to be. So like right here, it was waiting for earnings. If they had reported like good numbers in the eyes of the investors, this price action wise was a good area to be to pop. But because it didn't align with the sentiments of, how the people felt or whatever, it went the opposite direction. So now you have to wait for the excitement or the disappointment to die down, and then you can see if, because if it drops, it's gonna drop to a support zone. Just keep that in mind. The market will drop, but it doesn't just drop anywhere. It drops to a place where there's memory, right? So whenever it drops, look to see why it stopped here. Why didn't it drop to 120, right? Ask yourself, why didn't it drop to here, 125? Why did it stop here? And if you look back, you're going to realize, oh, wait, it is not a coincidence. It dropped to a level of support. There's memory here. The market remembers. So, yeah, that's it. I think, what's Bitcoin doing? What's Bitcoin doing? Okay, so as you see, the reason why everything is retracing, all the positions is retracing, is because Bitcoin is retracing, right? Bitcoin over the weekend hit 71,000. Was this over the weekend? No, yesterday I think it hit 70. Yeah, like right here. So with Bitcoin, that's what I'm looking at. A few things can happen, right? This level has to hold. Literally where it is right now has to hold. It has to hold, right? If it breaks down, we are going down. And if it breaks down and you are in any futures position, remember, all your profits are going into shit. It's getting dumped. Like, you're not going to be in green if Bitcoin drops. Let's say we wake up and then Bitcoin is like down here. Forget about it. Like, you cooked, right? For lack of a better word, I wanted to say yeah, okay, let me just keep it professional. But yeah, like here, if it drops to here, and it can, don't get it twisted. I don't think the bull market I just don't think so. But it can very well dip to here. I think this will be a good, like right here, right? So there's a possibility if this level doesn't hold, Bitcoin can drop to like 67, right? And if 67 doesn't hold, it can drop further down to maybe here, right? 65. And then if 65 doesn't hold, and that's the thing with trading, nobody can tell you, oh, this is what's going to happen. We take it level by level, right? If this holds, the probability, blah, blah, blah. That's all we're doing because, quite frankly, nobody knows shit. Like, we don't know. We just making educated guesses based on patterns. That's all we are doing. So nobody can tell you, oh, yeah, it's gonna. We don't know. You don't know nothing, right? So we just have to look one level at a time. Okay, Bitcoin is here. If this drops, where do you think it's gonna find some footing? Likely right here. Why? Because there's memory down here. Oh, why this shit keeps moving? There's memory down here. Right here. Right here, right? So if we go down to a lower time frame, let's say we go to the 15-minute. Now I'll go to the 15-minute and I'm gonna look to see. Okay, so now if I'm looking at the 15-minute, it's like, okay, look at it. Now this gives you more detail. Somebody got their stuff on. Right. Okay, who was talking? Okay. So yeah, so what I do is, so look at all this move. Bitcoin came up here. If you in a position and you didn't take profit, you watch all your profits disappear because you are treating your swing trading account as a long-term trading account, and you can't do that. If you're swing trading and you get in here and the market gives you in green, you see, oh, I got into Bitcoin. I risked whatever percentage, right? I'm up here. You still holding, thinking there's a bull run. You're gonna give up all your profits, right?